The homeownership rate is the percentage of homes that are owner-occupied. Keeping the homeownership rate high is very important for both the stability and growth of an economy. People who own their homes benefit when the value of their home increases, so they are incentivized to maintain their homes and even make improvements. People who rent their homes, on the other hand, do not see any benefit from an increase in their home's value. In fact, that may lead to higher rent, disincentivizing renters to maintain and improve their homes. The way most people buy their homes in the US is with a mortgage loan, where the home buyer borrows a bunch of money from a bank and puts their new home up as collateral for the loan. Interest rates on loans are determined by risk. Safe loans will have low interest rates, risky loans, high interest rates. People who have steady, high incomes and enough savings to make a down payment are very safe to loan to, so their interest rates on their mortgages will be low. People with less financial security are more risky to loan to, so their interest rates will be higher. In the United States, about 2/3 of homes are owner-occupied. That is about as high as the homeownership rate can get with the current system. This is because these loans create a scenario where the people with poor credit, who are already going to have a hard time making enough money to buy a home, are hit with high interest rates that make them end up having to pay more for a home than people with good credit. So trying to get that homeownership rate number higher without making systematic change has disastrous consequences. Between the late 1990s and 2008, new tech allowed for the creation of financial instruments that banks utilize to stay a step ahead of regulation, giving them the opportunity to make huge short-term profits by over-lending, raising the homeownership rate to nearly 70%. In the long term, the banks played hot potato with the toxic assets they created until the house of cards came toppling down, bringing the entire economy down with it. In the days before the internet, supercomputers, and smartphones, mortgage loans may have been the best we could do. Now, though, I think that archaic system is holding us back. It's time for something new, something that makes housing more affordable to more people long term, a system that can provide more flexibility and less inequality without sacrificing stability or growth. This is a tall order, to be sure, but it's no pipe dream. And with the collective knowledge built up over the history of humanity, I think it's achievable so long as we give it a shot.